Hey guys, hope you had an amazing weekend. I really hope it's amazing because it's been a very terrible one. Following up with the war, crisis, geopolitical tensions, bombing, and all of those shit. I just hope none of you are affected by that. But that being said, it's a good day. It's a beautiful Sunday. And yeah, if you just joined for the first time, if you find this content very helpful, please like, share, and subscribe. And also, if you like what we do here at nfxstop.com, please subscribe to our membership plan so you can learn how to trade like this and join our Discord community so you can get real-time market updates and other helpful trade insights. That being said, let's get on chat. As usual, we're going to be taking analysis on gold, US oil, and Bitcoin. So today we're going to be touching both the fundamental and the technical aspect of the market and see what we could, figure out or predict from where we are right now. So on gold, last week we saw a price drop down from a peak at that was at 34.50 down to the lows at 33. 40, 33.41 to be precise, and that was following up with the escalation of the Ukraine Russia war, and also the market has just been consolidating to decide where it's going to happen. And also we've been having a very last week we were seeing some back and forth movements with Iran and Israel, but this weekend we saw the US involvement, and that's like a really pivotal point because now we don't really know how Iran is going to respond, and these are factors that are really going to play a great role on deciding the fate of the market this coming week. And generally, I expect the price of gold to hit higher. The bull run continues because wherever there's global economic tension, we always expect higher prices for gold as investors are going to definitely be looking towards safe haven assets. Bitcoin has not been performing good in that aspect, but gold has been really doing very well about that. So if the war escalates, which right now it looks likely it's going to escalate because Iran is not really backing off, and it's not just the talk of the Russia Ukraine war, which was a bit even more controlled. This current war is like an open warfare between Israel and Iran, and it just started last week, like really opened. So we're still like uncharted territory. We don't know the response and how this is going to escalate further. But if there is any sign or indication of further escalation of the war, then I'm expecting to see price that's heading for higher highs on gold. We could see price heading as high as 3,500 to 3,800. That's very possible. So right now we've been in this long short-term consolidation, which I'm gonna just highlight here. Use this for it's much better. So we've had this short-term consolidation on gold, and it was up for a while, and now we've seen like it has already reached an apex, right? Because we saw price tested back the support level, and that also coincided with our 200-day moving average. This is the 4-hour time frame, just for you to be clear on that. That also coincide with our 200-day moving average, and we saw price approach this level. So right now we're still slightly below, slightly around our 78.6% Fibonacci retracement level, and I believe market open today in a few hours, like an hour from now, we should see price break this level and start heading towards 3,500. Because I mean, we saw what happened this weekend, and investors are definitely going to react really strong. So I'm expecting to see price break above this level. If you're going to take the trade on this, we're putting a stop loss somewhere around the moving average as the support level or as our stop level, and then our target probably be somewhere around 3,500 and like slightly higher than that if we get more retaliatory responses from Iran and also its allies. So for now, this is what we have on gold, and this is mainly the play that I'm expecting from gold. Currently, we are currently at this level. Just to reiterate, we're currently around this price level, which is the previous resistance level, and it's also a very strong resistance level. But due to this consistent consolidation and market decision, we can see so many candles of group of candles which are really showing strong resistance and confusion in the market. This will likely mean that if we break above 78.65% level, then we have a clear indication for higher prices, and the market will be poised for 3,500 most likely. That will be the best. That will be the best case scenario for this trade for the current pair asset of gold. So that being said, we're going to be moving forward to US oil, and US oil is very interesting because I mean the market is really very drastic right now. It's things are happening very drastic, and it's moving very irregularly. This is not a regular market. This is not a normal market movement. We saw price. The global demand for oil is still at all-time lows, but due to the war and due to the threats, like the tension and the pressure, and people were expecting that the Strait of Hormuz could be shut down. There is this expectation because Iran talks about this. They always bring it up, and if that gets shut down, that's the major passage or trade way for crude oil all over the world globally. Like 20% of the world um, oil trades go through the Strait of Hormuz. So if that gets shut down, there is high scarcity. Even with a high level of supply, that's going to be a great impact, and that's going to shock the market. Now, if that happens, or for any reason the war escalates any further than that, that leads to naval or sea fights, that would cause a big shock on the oil prices and oil infrastructures, and that would push the price way much higher. So we could be seeing price get as high as $80 per barrel, and even possible get us even as high as let's say even $100 per barrel. Let's go back in time and see what we have here. I'm gonna just pick up this tool. Yeah, so we can see this is a potential target, this is a potential target, and lastly, this could be also a potential target. That's like around $100. That's like the extreme case if we get any issue that leads to the closure of the Strait of Hormuz. I hope that doesn't happen because that's not a good side for us. And if that happens, that also means another thing. That means that the war has been, it's a full-fledged war. It's a full-scale war, and that would mean the U.S. is already declaring a full war or an open warfare with Iran, which would lead to a lot of many other bigger problems. All those things are not what we want to be experiencing this particular year or this period of time. Nobody wants war. So our prayer is the war de-escalate as soon as possible. Peace talk comes into play. So even when we get a max peak, probably price spikes to $80 out of the fear and uncertainty due to the closure of the port of Hormuz, or maybe other threats to the oil shipments, the U.S. oil infrastructure and shipments around the Iranian borders. That would be a big problem. But if that happens, we shut them, and if there is uh, a progressive talk about peace, then we expect market to decline really fast because the actual price or the market value for oil should be somewhat around $50 per barrel because of the supply is still way much more than the demand for it. The only reason why we're seeing this on natural spikes and high movement on US oil price is because of the war with Iran. Nothing more than that. And after the tension dies off, we expect drastic drop, something like this. Drastic drop from the current price towards the lows of $60 and down to $50 per barrel. For now, guys, if you haven't traded on oil, be very, very careful. Be very, very careful. Now it's advisable to not even take any trade. But if you're already in a position and you're currently stuck in that position, hedge. I strongly advise you hedge your position at the current market open. Hedge your position to be sure that regardless of the risk involved, you don't get blown out or you don't get to lose too much, and it's only a short period of time. As soon as the war de-escalate, I'm expecting that the war may de-escalate by maybe this weekend or next week, depending on how the Iranian government respond to this current this weekend, yesterday's attack by the US. So keep your fingers fixed on your on your tabs. Stay glued to your screen. Watch what happens. If you're not in this trade, it's better for you to stay out of it till there's a clear indication of what the market is preparing for. If you're on this trade, then like I said, be very mindful of the positions. The technical analysis right now not working as expected. This should be the case we have on technical market, which is actually even looking bullish. It might be a continuation of the trend if we break above 77, but also it could also be reversal because we're currently around strong resistance area, and from the fundamental aspect, it's just messed up. So be very careful, guys. Once again, trade smartly, trade wise, protect your investment, protect your capital at all cost. Lastly, the last we're going to be looking at is the Bitcoin chart. So Bitcoin has not been responding like gold. Gold has been responding very well to being a safe haven asset and investors' choice of safe haven, of mitigating your risk. But Bitcoin, on the other hand, is not doing very well. Bitcoin is drastically dropping down, and it's not good for any cryptocurrency investor right now. It's the reverse of what we expected. A lot of big firms are still buying, a couple institutions are still buying, but then we're not seeing the progressive growth on Bitcoin. We're not seeing anything that's making us get that, ecstasy or excitement. More or less feels like more people are actually de-escalating the risk from Bitcoin and putting it into gold, which is their preferred safe haven asset. So for now, guys, on the technical aspects, we still have this consolidation pattern forming up, and we're still approaching our 200 moving average, and the price will actually touch this level and bounce back up, or it could touch this level and go further down. Nothing is clear right now. Bitcoin is very uncertain. Technicals are not making sense. Fundamental as well, not also making sense. So this is our support level, which we currently are right now. So if we break below this level, we're going to be on our Fibonacci 50% retracement level. And if we break below that level, then we're going further down. But I don't think that's going to be the case. I think we're like going to bounce off on the 200-day moving average and see price that's trending or correcting towards higher prices again. And all of this is also affected by the war tension right now. War is not really looking good for Bitcoin. Perhaps this narrative may change and people may start seeing it or perceiving it as a safe haven asset, because it actually is a safe haven asset. I mean, you cannot carry a gold everywhere. If you're going to travel for any reason there's a war, you even safer with your Bitcoin, because you can actually travel and exchange your Bitcoin for cash wherever you go. It's globally accepted right now. So it doesn't make sense why it's dropping, but it is dropping. That's the fact, and we'll have to act in line with that. So for now, guys, like I said, protect your investment. Be very careful with your Bitcoin trades. If you have your position running up, it's better right now to just stick on holding. Just hold your investment. Don't trade. Don't try to be too smart. Just hold your investments and watch what happens in the markets. It's general for all crypto assets. Everything is depreciating right now. So on the larger time frame, I have similar to that. This is my long-term time frame. I'm going to show you guys something I did just a second. Yeah, so this is actually one of the key metrics I use in tracking the price of Bitcoin. So somewhat this is going where we are right now, and yeah, the indication tells us to buy. This is on the Bitcoin Robo chat, and this is the first time we're having something like this. The last cycle market was way up at this particular period. The last two cycles also, we saw price already approaching really really good levels at this particular period. Right now we're still here, and it's not looking good because we're almost halfway into the cycle, the 4-year cycle splits, and the bear market is already coming up close to us very soon. So why this has been shared? Also, here on our chats, I also have this on my chat. We have this setup coming up. This is the expected cycle period, which I analyzed a long time ago, which I'm working with. I still work with. Currently, this is what we have, and this is where we are right now. So we have very few months left for the estimated number of days that the cycle is supposed to last for to get it to a peak. So if between now, June, July, August to September or October, we don't see something good, it tells us that there's a possibility that this year may not be like every other previous Bitcoin cycle, and we may not get something good from this cycle. This might be the best thing we can see. Maybe 100K will stop. Who knows? Or maybe we could see the price still rally a little bit higher and get towards 150K. We still got time. We still got summer, July, August, and June, and September to probably November to see how the market plays out. But for now, guys, be very careful with your investments. I'm going to show you guys something as well of what happened 2 cycles back. Yeah, so this was what we had in 2016, 2017 cycle. So this started, and towards July, this was also in June, right? May, June. We also saw market being slow a little bit, and then from July we saw the bullish movement. July, August, September, October till December. That was a lot of movement, right? So we could have similar case in this particular cycle: July, August, September, October, till probably picking up in December. That's one possibility, but that's just opium, and that's just relational markets analysis, not based on fact. So, guys, that's all we're going to cover for today's analysis. If it's been very helpful, once again, like, share, and subscribe, and join our Discord community. Drop a comment below as well if you have any question or any doubts, and feel free to reach out. Cheers, guys, and have a great and profitable week ahead.